Good morning, I'm Raymond Yeung. I'm a Hong Kong tax consultant. And now I'm going to talk about Hong Kong tax principles. Before 1997, Hong Kong was a British colony. So Hong Kong tax law basically follows in the UK. So if you have been living in UK or English-speaking countries such as Australia, Canada, New Zealand, you should not find Hong Kong tax principles difficult, because in general, Hong Kong is quite similar to these English-speaking countries. Hong Kong tax law has remained unchanged, in most parts, after 1997, because the basic law says that most of the Hong Kong law will remain, effective after 1997. So what are the Hong Kong tax principles? They are, rules and laws, stated in the Inland Revenue Ordinance. The statute law of taxation in Hong Kong, IRO, and some rules in the Inland Revenue Rules, IRR, and case laws, of course. Hong Kong case laws, quite a lot. You can go to the library and look at it. And of course, law is a difficult subject. But for most people, the laymen, they need not go into the details, because you have some basic knowledge. That is enough. How to have a basic knowledge? Very easy. Come to my website or read my book here. You see, Hong Kong Tax Principles. This book is written by me. I'm the author, Raymond Yeung. And you may go to the bookshop to have a look. This book is written in two languages. The first part is in Chinese, and the second part is in English. As I said before, Hong Kong tax principles, the law, legal principles, IRO, IRR, case law. And apart from that, there are a number of practices, official practices published by IRD, Inland Revenue Department. You can find them on IRD's website. They are called DIPN, Departmental Interpretation and Practice Notes. There are about 15. They are quite difficult, for laymen, for an ordinary man to read, because it contains a lot of jargons, a lot of legal phrases. As I said before, because as ordinary taxpayers, you need not borrow them. You need not read these typical practices, papers, because they are basically for the practitioners to follow. Of course, the IRD expect everyone to report their tax correctly. And that means that you have to file a correct tax return. If you file an incorrect tax return without a reasonable excuse, they may take action against you. But in most cases in Hong Kong, tax returns are quite simple, and not so difficult. If you should have problems in completing the tax returns, then you can phone ILD. The officers are polite, and the professional officers, assessors and assistant assessors, they can speak English and Cantonese and Mandarin Chinese. Hong Kong officials must not able to speak English, although not so good, but they can understand your problems and explain to you about the Hong Kong practices, Hong Kong tax law. If you are a businessman, then you should prepare accounts, financial accounts. And accounts, usually you should follow they call it GAAP, generally accepted accounting practices, GAAP. That means those principles stated in most accounting textbooks, such as Frankfurt. If you follow, the textbooks, follow the guidelines, published by the accountancy bodies, then your accounts are okay for taxation purpose. So for businessmen, I suggest them to know some basic knowledge of accounting, because these accounting practice are also tax principles. As said, in a court case, they just the accounting principle should be adopted unless they are in conflict with the IRO or in conflict with the case law. So Hong Kong tax is good because tax rates are low and you don't pay a lot of tax. If you do business in Hong Kong, if you work in Hong Kong, the salary tax rate is low, maybe less than 15% in most cases. Even if you are a very big income earner, your tax rate is at 15%. And that is, I don't think it is high for you. So that's all for my today talk. Come to find out more details at my website, Raymond Yeung, tax consultant at rytc.com.hk. For now, goodbye.